Hello guys, welcome to the video. If you are new here, please subscribe our YouTube channel to see more education, motivation and informative video like this. Meet Warren Buffett, the man they call the Oracle of Omaha. Today, we'll take you through the journey of a boy with a business mind, who grew up to become one of the richest and wisest investors the world has ever seen. But his success isn't just about wealth, it's about wisdom, patience, and the power of compounding. Warren Edward Buffett was born on August 30, 1930, in Omaha, Nebraska. From a very young age, he was fascinated by numbers and money. While other kids were trading baseball cards, Warren was trading stocks in his imagination. At just 6 years old, he bought a 6-pack of Coca-Cola from his grandfather's store for 25 cents and sold each bottle for a nickel. A natural entrepreneur, by age 13, he was already filing his first tax return, claiming deductions for his bicycle and watch as business expenses. And at 17, he and a friend bought used pinball machines and placed them in barbershops, turning spare change into serious profit. He later sold the business for over $1,000, more than most kids made in a year. Warren was obsessed with learning. He once said he reads 500 pages a day, and that knowledge builds up like compound interest. As a teenager, he devoured every finance book at the Omaha Public Library, some more than once. After being rejected by Harvard Business School, Warren was crushed, until he discovered that his idol, Benjamin Graham, taught at Columbia. He applied, and got in. Learning directly from Graham, the father of value investing, changed Warren's life. He also took a public speaking course from Dale Carnegie, which he says was one of the best investments he ever made. That diploma still hangs on his wall today. After college, Warren worked for Graham Newman Corp., but soon returned to Omaha and launched his own investment partnership in 1956, with just $100 of his own money and some capital from friends and family. By sticking to Graham's principles, buying undervalued companies with a margin of safety, Buffett delivered stunning returns. From 1957 to 1969, his partnerships averaged a 29.5% annual return, double the S&P 500. One of his first big wins is the Sanborn Map Company. Buffett realized the value of its assets exceeded the price of its stock. He bought in, pushed for change, and made a fortune. In 1965, Warren took control of Berkshire Hathaway, a failing textile business. Ironically, he called it his worst investment decision. But rather than walk away, he used Berkshire as a shell to buy better businesses. Over the years, Buffett transformed Berkshire into one of the largest holding companies in the world. He bought companies with strong brands and predictable earnings, from Geico, which he admired since college, to Coca-Cola, where he eventually invested $1.3 billion, earning over $20 billion in returns. Buffett often looks for companies with an economic moat, a durable competitive advantage that protects profits. In his words, a great business is like a castle, and the moat is what keeps the competition out. Buffett's philosophy? Simple, but not easy. Small diamond: buy wonderful companies at fair prices. Small diamond: avoid unnecessary risks. Small diamond: let your investments compound over time. He often refers to Mr. Market, a moody partner who offers you stocks every day. The trick? Only say yes when the price is right. Another gem? If you could only make 20 investments in your life, you'd think very carefully about each one. Buffett believes in making fewer but smarter moves. In 1959, Warren met Charlie Munger, his intellectual partner and lifelong friend. Munger encouraged Buffett to shift his focus from buying cheap businesses to buying great businesses at a fair price. Together, they built Berkshire's empire, combining Buffett's discipline with Munger's worldly wisdom. Their partnership is a model of rational thinking and mutual respect. Despite being worth over $100 billion, Warren lives simply. He still drives himself to work and lives in the same modest Omaha home he bought in 1958. Why? Because to him, success isn't about stuff, it's about freedom and impact. In 2006, Warren pledged to give away over 99% of his wealth. He co-founded the Giving Pledge with Bill and Melinda Gates, inspiring billionaires to do the same. Warren Buffett's story teaches us that great success takes time, patience, and consistent effort. He didn't get rich overnight, but he did get rich for sure. His life is proof that you don't need to be flashy or follow the crowd to succeed. You just need to keep learning, stay rational, and invest in what you understand. If Warren's story inspired you, hit that like button, subscribe for more success stories, and comment below who you want to see in next video. What's one habit you'll adopt from Warren Buffett starting today? And remember, your journey to greatness starts now.